All right, so welcome everyone once again. Let's go into the chat. I'm going to go straight into the chat and I'm going to show you how you can define your own zone. It is very important that you have an understanding of what your resistance, where your resistance is, where your support is, and how you trade in between those zones in order for you to make money for yourself. So let's go into the chart and see how we can do that, how we can easily define our zones and trade these zones for us to be able to make something for ourselves. So like I say, if you have anything in mind, you have any question, you can put it in the comment section, and once I'm done with this session, I will try to go there. So apologies for coming up a little bit late. This is because of my network that was trying to mess us up before. Okay, so when I talked about the simple market geometry recently, I showed you that there are some things that you need to look out for in your trading, and this will help you and permits you to be able to trade better. So most of the time I do my analysis on the 4 hours and the daily time frame. If I do my analysis on the 4-hour time frame, I also try to check the daily time frame before I make my decision. So this is a chart. This is a chart for you to be able to define a place for yourself, or for you to be able to define a zone for yourself. You need to go back in time. You need to go back in history a little bit, and that will help you to define a zone. But before I go into this, for the purpose of people who do not understand anything about what they are seeing on the screen right now, basically what you're seeing here is the charts. We call this the charts. And what this does is it brings together the behavioral pattern of traders in the markets. So you are in Nigeria, you are in Ghana, you are in the US, you are in the UK, wherever you are from, you're trading at this time. You're seeing this chart. I am seeing something in this chart now. I may be seeing this chart and say, oh, this is a downtrend, right? And I say, oh, this is a downtrend. So because this looks like a downtrend, I'm going to continue trading a downtrend. But you are looking at the market, and maybe let's assume that at this point that we are both looking at the market is still somewhere, let's say somewhere like this, and you see the market, you're looking at the market, and you're saying, well, this is where I want to set my trend line. And you have set your trend line like this. You set your trend line this way, and you tell yourself that now the market has gone above my trend line and I am going to do a buy. Yet another person is looking at this market at this point and is saying, well, this is my last high, and the market has not gotten to my last high, and when it gets to my last high, I'm going to do a sell. So this is your last high, right? So you are using the trend line and looking at the market and saying, well, this is my trend line. If the market breaks above my trend line, I'm going to do a buy. Another person is saying, this is my zone. And if the market comes to this zone for any reason, I am going to do a sell. I'm not going to do a buy. And if it doesn't even get to my zone, okay, somebody say, okay, this is a zone. And the zone, you define a zone like this. You said, okay, this got to this point before going up here. You say, okay, this is a zone for me, and this is a zone. And you say, okay, if that person is looking at this place, he has defined his own zone like this, and he has said, okay, if this thing gets to this zone, I'm going to do a sell. And so for him, this is a zone. And truly, this market gets to this zone, and it does a sell. But you have said, if this thing breaks my trend line, I'm going to do a buy. And you do your buy. And at that point, you are looking at maybe your buy going all the way up to this place. Guess what? This person is looking at the market differently because he is waiting for the market to get to this last low for him, which is this zone. And once the market gets there, the market closes below that zone, it does its buy, it does its sell. Now, if there are more people looking at the market like this market is going to drop. And if some of you are looking at the market this way, immediately this breaks the zone, that this your trend line, the market is going to go up a little. So there's going to be like a dragging between the bulls and the bears. And who are the bulls? The people pushing the market up. The people doing a long, doing a buy in the market because they are looking at this and saying this market, this exchange rate is going to rise. Whereas some people are saying that, yes, this exchange rate will rise, but it will not go beyond this point because this was my last low. Now, if there are more people looking at that zone, when this thing gets to this zone, guess what will happen? It will keep dropping. So people look at the markets and they have different sentiments. So I am looking at the market like this. I am defining something. But you are looking at the market and you are defining another thing. But there is something that is common, and that is your resistance and your support zone. So what do I mean by resistance and what do I mean by support? Now, by resistance, I mean that place where the market gets to, the highest high that the market gets to, or that place it's getting to, and the market returns down, which in another word can be called the ceiling, the roof, the ceiling. And so I may look at my zone and say, maybe I'm somewhere here right now, and I look up and say, well, this for me is a place, it's a zone. And why am I choosing this place and not this upper position, which is the highest high? I am choosing this place because this market struggled a lot here. There were more touches. And so this makes this place stronger, looking at it around here. However, I would also want to put another line up here because while this place is a zone for me, or is a point of resistance for me, there is a higher resistance. And that's higher resistance. Why am I also choosing it? Because the market also touches it several times and couldn't break it to the upper side before breaking down. So rather than choosing just this up as my resistance zone, I'm going to choose these two. So I have two places that I am looking at my resistance. So like I am saying, let's assume that I am looking at the market around here. So where is going to be my support zone now? I'm going to say, okay, where is that area where this, where price gets to, which serve like a footstool or like a support? This one is like my ceiling or my roof for this area. And now I want to find a level of support now where this market gets to and, it keeps bouncing or, playing around. And I can define so many zones around here too. I can look at this place and say this is one. I can also look at here and say this is another. And I can say, well, I just want to look at this lowest low. So now I've defined a lot of zones for myself. So what am I able to do by defining all this? I'm able to trade in zones. So let's assume that I am somewhere here now and the market gets here. It bounces up, comes down, bounces down, comes up, and then it breaks it. What is that telling me? That now I want to do a sell. Why? Why am I doing a sell? Because this was a footstool for me before. It was a strong zone. But guess what? The market keeps getting there and keeps breaking, and it keeps bouncing up, all of a sudden it breaks it. That means a zone has been broken and the market wants to go down now. So what am I going to do? I'm going to do a sell. I'm going to do a sell here. And I'm going to look for my entry. In one of my courses, I define how you can enter this to reduce your loss. However, you can just say, well, at the close of this red candle, as another candle that is also red candle forms, I'm going to go here. And you can say, well, I want to wait for a retest. So the candle goes all the way down, and guess what? It comes back and retests like 50% of these two candles. Perhaps maybe you are even seeing it somewhere around there. It goes up and retests it, and you go in and do your sell. And you do your sell, and it keeps going down. Now, how do you know where to take profits? You can also go back in history and say, has there ever been a zone for me? And this was like a zone here. This is like a zone. This side was where the market got to, and before it turns back. So you can say, okay, this is a zone for me, and I'm going to take my profit there. And look at it, the market gets to that place truly. The market gets to this place truly, and the market begins to consolidate. So rather than you continuing in this headache of consolidation and all that, you can just go out of the market, take your profit immediately it gets here, and then go and wait and see what happens again. The market also breaks below this zone. And then you take another sell and look back in history and say, where was it that I got a zone in the past? And you take it. Now let's look back in the future. Before we look into the future, I had defined all these areas because they look like some zones to me. But see what happens in the future. As they were getting to those zones, you see, the market was bouncing back. The market was bouncing back. All this black line, I put them before I move this right? But look at what is happening. When the market comes down and goes up above here, you decide to do a buy, right? And you take the buy to the next zone, and it goes up above that, comes and do a retest of where it is coming from, and see what happens. It gets to this our next zone, breaks it. As at that time, maybe you've taken your profit because you look at that place and say, this is my next zone. You've taken your profit, see what it does. It comes back to do a retest before continuing. And when it continues again, it gets to this point again. There's another hiccup because when it gets to this point, when it gets to it at this zone, see what happens. Now, you may wonder, how is it that this thing is looking like a magic? Why is it that she defined the zone before all this happens in the market? And now, truly, when the market gets to this place, there was some reversals, some retest or retracement. Let me call it retracement. It's not a reversal here because it just retraces a little bit. A reversal is like this, when the market is going down and it reverses totally and begins to move up. That's a reversal. But we have what we call a retest or retracement. So the market is coming from down, then it retraces itself back a little bit to where it's coming from before going up. Because the market doesn't ever go on a straight line. You're not going to see for an extended period the market just going like this, only green candle, all the way up. No. The market does go up like this, comes down a little bit, goes up again. These are the moves you are going to be seeing in the market. So you need to be able to work on three things: identification, money management, and your emotion. Why do you need to manage your emotion in the market? Because this market is not going to continue your way like that. it's going to come down. Sometimes it may even come all the way down to where you entered from. Look at this. You won't enter here, right? You are not going to enter at this bottom until it breaks your zone. Now, it breaks your zone, closes here, you enter, and you did not do position management. See what happens. This thing comes all the way back to where you enter from. Perhaps it even puts you in a little bit of red, and you are afraid. Although maybe you've set your stop loss somewhere below here and does not hit your stop loss, but you are so scared that, I've been in profit. I was in 100 pips. And now it has come all the way back to where I entered from. In fact, I'm even in red, and you're panicking. And you panic so much, rather than for you to let it eat your stop loss, you decide to take it out at this point. See what happens? The market continues back, it's way up. So that's why your emotion is also required. You need to have your emotion in check constantly. You need to constantly have your emotion in check, because the market is going to swerve you to the right, to the left. You are the one that would say, it's either if you know you cannot withstand this, that the market would give you some profits and then come all the way back and wipe all your profits. What do? You want to do position management. And position management requires that as you are in profit and maybe it has broken some zone for you, you're moving it into break even. At another point, you move it into like some pips into profit, you manage your trade. So that if the market decides to now turn against you, you know that at least it did not take away all my money. It didn't take away all my money. So that's why you need to understand. You need to define, even before you go into this trade at all. You have seen this trade now. Sorry. You've seen this trade now at this place, and you want to enter it when this thing closes above this your zone, this your line that you have formed. Before you enter it at all, you want to know, where am I taking my profits? Where am I doing my position management? Where is my stop loss going to be? And if you look at it and you cannot have at least a 1:2 risk-reward ratio, please don't enter the trade. Unless maybe you are a scalper, you just want to do 5 pips. So you set 5 pips, take profit, 5 pips, stop loss. You can do 1:1. But if you're a day trader, you're expecting maybe like 100 pips. Your stop loss should not be more than 50 pips. So now let's assume that you are looking at this, your next zone, as your take profits. You need to ensure that your stop loss is below here. And if you look at it, this move to this place is not more than half of this, or the whole of this. So if you put your stop loss below this last low and your take profit here, at that point, you would have been able to, even if it hits your stop loss, let's say your stop loss is 50 pips and your take profit is 100 pips, and you set 5 trades. If he hits your stop loss in 50 pips, if he hits it 3 times, and only 2 times he hits your take profit. And that doesn't mean you set only for gold, because if you set for gold 5 times, if it's going to eat your take profit, it's going to eat take profit. It's going to eat stop. If it's going to eat your stop loss, it will eat it the whole of the 5 times. So when I say maybe you set 5 trades, it means that you take gold, you take maybe crude oil, you take Euro USD, you take USD CHF, like that, in 5 different places. So now, and all your take profit is 100 pips, all your stop loss is 50 pips. If you make 2 profits only, you only are able to get to your destination twice only. That's 200 pips. And you lose 3 times. That's 150 pips. Guess what? You are still in 50 pips profit. That's why you need to learn to manage your money when you are in trade. And that is what I posted about, was it yesterday or day before yesterday, on risk management. It is one of the most important things you need to do for yourself in trading. So now identify your trade, your zones, by looking at the area that the market struggled with. Identify the zone. You can have many of them. You can have them in many places. And by the time you go to the future, what happens? You are going to see that as the market is getting to that zone, it's turning back. It's getting to that zone, it's turning back. So this is just one of the ways I look at the market. However, most of the time I don't just trade zone. I have like 10 strategies that I trade. So I could just say, okay, I'm focusing on this, and I have been able to, look at some pairs. So I can say with US dollar, most of the time what works with it is my double triangle method. I look at USD card, I can say it's my rectangle that works with that one most. So when I am trading that, I'm using my rectangle zone. That's why, like I posted yesterday, I teach like 10 different strategies so that you don't have to monitor all of them, because you are also going to have your favorite pairs. You just need to know which one works very well with your favorite pairs. So if you have identified the ones that work well with your favorite pairs, then you continue trading just those ones. You don't need to know all the 10 or to master all the 10. Just focus on, maybe one or two or three, and your pairs that you're trading. If one or just one of the strategies can work very well for like 3 pairs for you, that is enough. Trading 3 pairs is okay for you. You don't have to trade 10 pairs, 100 pairs to make money in the market. The lower the number of pairs you're trading, the more your focus, your concentration, and the more you have the chance of winning at trading. And also, I'm just trying to discipline myself too, in order for me to be able to trade, just few pairs. Most of the time I look at almost like 20 something pairs, and you have like 10 trades going on for you. You can't even monitor all of them at the same time. So you need to learn to manage your risk. And if you are interested in knowing more about these other pairs I trade, like this other, what is it called? My other strategies that I trade. Look at one of them on this, my crude oil. I traded this some times ago. And this is what I call my double triangle. Before I drilled this one out, I only saw the market, at this point, somewhere around this point. And I was able to draw the first rectangle. The first triangle, sorry. I draw the first triangle, then the first triangle gave me the way to the zones for me to be able to draw the second one. And then I was able to pick where my first take profit 1 and take profit 2 is going to be, and see what happens in the market. It eats my take profit 1, and then it eats take profit 2. You can also define take profit 3, and my take profit 3 would have been here. But guess what? I hardly do. When I see that it looks like a trending market, I hardly do take profit 3, because it could just mean that this market is retracing. So this would have been my take profit 3. But guess what? It did not get to that take profit 3. So most of the time, I stop at take profit 2. So why do I usually do take profit 2? Because if this is a trending market and this is a downtrending market, the market is going to retrace most of the time to 50% of your market, and or 61.8% or so. So if it's going to do 60-something% of the market, it's not going to go beyond my take profit 2. And if you're going to do like 50%, it may not even get to my take profit 2. So if take profit 1 has a lot of potential, I take profit 1, I get out. Then if it breaks my take profit 1 and begin to go up, I take it to take profit 2 again. Now, how do I trade this? How do I trade this? How do I know that this thing is likely? This does not mean I'm predicting the market. By the way, sometimes I may draw it like this and it goes and begins to go down. But most of the time, this pattern especially is a high probability setup pattern. High probability setup pattern. And if you like to, learn more, and know how to trade all these other patterns. Because guess what? Patterns work wonders in the market. Because behaviors, if humans' behavior form patterns, they form patterns. The way people reason, usually, a lot of people, most people in the market, 90%, 80% of the people in the market go into the market with fear in their mind. So people react with fear. They see that, oh, this thing has moved beyond this place, and they're already afraid. Immediately it touches this place, they break out of the zone. They quickly take their money and get back out of the zone. And so it happens so many times because we even have more scalpers in the market. People who are afraid, they can't wait for the market to go all the way home. So they start bailing out here. It is only when the big boys enter the market again that it keeps going on. So that's fear. Those the behavioral pattern of people, the majority of people in the market, the new traders, the people who are not professionals. We have very few professionals in the market. The people who are not professional, their pattern of behavior in the market will usually form a lot of move in the market. So you understanding this behavioral pattern will help you to be able to define a pattern for yourself and trade that pattern and make money from this market. So would you like to learn how to trade like a professional, to be able to define your zone, to be able to trade with different strategies and know exactly what you're doing in the market? I would encourage you to join one of our, you can come to our site like this and pick one of our coaching plans. Most of the time, the popular coaching plan that I always tell people about is our masterclass. The masterclass is a bit cheaper than the one-on-one, and it also takes you through almost everything you're going to learn on the one-on-one. So this one in the middle is a popular plan and is the masterclass. So you can just read it a little bit and come to the bottom. This is the price there, 70K. So you can view it more by clicking on view option. And if you click on view option, it's going to take you to the page, and the page explains everything about what the masterclass is about, all the videos you're going to have access to, all the trainings. We actually have like 40 lessons, and we have it covering like 22 courses covering like 40 lessons. And you're going to have lifetime access to all of these lessons through our academy, our online academy. You're going to log in, you're going to have your own page on the academy. You log into your academy, to the back office, your school, and you're going to have access to those things. And the access is going to be lifetime. You're going to have lifetime access to all those. So you can come back next year and say, I want to do a refresher, watch the videos again, learn from them. But aside from that, you are also going to have access to, okay, I think I choose the, sorry. So I'm choose MSc option. So this is it. This is the one for masterclass. So if you come down here, you are going to see the price. That is $200, and you are going to have access to 40 videos that you are going to have lifetime access to. And this is the course outline. We have the basic level, we have the intermediate level, we have the advanced level. So the advanced level, the basic level covers like six courses. And those 6 courses covers up to 20 lessons. However, this is your foundation. A lot of people will say, let me just quickly rush to the advanced level and go and learn the strategies. No. You need to, even if you know a little bit about Forex before, you need to unlearn and relearn. And how do you unlearn and relearn? Come back and start from the basic. Learn from, the market participants. How do you make profits? What are you trading in the market? How do I trade Forex? When do I trade Forex? What time of the day, what time of the week do you want to trade? Buy versus sell, what is a PEEP? How do you calculate your take profit and stop loss? How do you understand your lot size? You know, everything on your basic level. Then you come to your intermediate level. Now, this intermediate level is very important. Why? Because your risk management, I did 2 lessons on risk management 1 and risk management 2. It is very important. This is where you manage your money. This is the money management aspect. So you need to learn the intermediate level too. Your position management and time management is also very important. You don't want to waste your time in the market. If you have a job, for instance, you want to manage your time so that you don't waste too much time trading the market. You know, then you want to know how to set up your trading plan. Trading plan is very, very essential. Before you start trading live, you need to have your trading plan in place. Forex trading is a business. And for any business you're going to, normally you will have a business plan. So for your trading too, you should have a trading plan. For God's sake, you are not gambling. If you don't have a trading plan, then you are still gambling in the market. And you don't want to gamble your hard-earned money. So what do you want to do? You want to watch, you want to learn all this intermediate level. Then when you move to the advanced level, this is where you have all the strategies. All the strategies. I start from the currency correlation. You want to know how you identify the strength of one currency, you know, to another, how you know when the currency is stronger than the other one, and you know that will help you to know which currency to trade, and it will also help you to become intimate with the currencies and identify the one you want to be trading. Then I moved to simple market geometry so that you can begin to practice with the simple strategies in the market on your demo account. Then I did the Elliott wave. Elliott wave helps you to trade, especially a trending market. You know when the market has finished a retracement and begins to move on to continue its move. And then I also have the sniper strategy, which is one of my favorite strategy for you to trade the market. I have the rectangle strategy, a very good strategy that helps you know your zones, different zones. Basically 4 major zones that you trade. Some people call it the quarter strategy. You know, so it helps you trade in quarters. You have 3 zones that you're trading. Then the consolidated rectangle is there, the mosaic rectangle. I have the 12 pattern, trading the 12 pattern. I have trading the double triangle. I have trading the asymmetrical triangle pattern, then the rotating triangle pattern. And I have psychology of trading and an advanced level of risk management. So all of this, guess what? This should because all these courses, if I'm selling them one by one, you are going to pay $100. If I'm going to sell each of the courses to you, you will likely pay $100 per course. Now, you're not paying $100, but for everything, to have access to everything, lifetime access, I'm charging you just $200, and that's $70,000. And guess what? You are also going to have 10 live interactive sessions with me. For masterclass, it's going to be with me and others in a group. And, you know, it's an interactive session. You can ask your question. Maybe you've watched this thing before now, and you have some questions on it. I take you on a summary for you to understand it deeply, and then you can ask your question. You know, we do all that together. So that's basically that, just 70K. If you have any question from what we have studied today, or you want to be a part of our master class, you can reach out to me in the comments in my inbox, and we can get you started. So if you have any question at all on what we did today, please put it in the comment section, and I will get back to you. Thank you so much for staying with me today on this. Thank you for staying with me on the training for today. If you have any question, don't forget you can ask it, or you can reach out to me in my inbox. Thank you, and please do